Cardano had a really nice run yesterday, up by 14%. I tried to catch this one, but maybe I was just a tad too greedy, trying to get a little bit of a better snipe in down here on the low side. But as you can kind of see, following on from the previous video, we were long into this one. So the last video that we put out on the technical analysis, we were looking for the long position. Entry was going to be around the 84.72, take profit 87.43, stop loss 82.77, and it's a 1.5 risk reward ratio. We did capture that. We've got some great profit here. Obviously, we saw the reversal, and it's all a very good kind of position to actually see here with this structure. We have a great 5-wave move coming here. We have a 3-wave corrective pattern coming in here. So let me show you this. You have your A, your B, and your C. Nothing unusual about it. So I was just trying to snipe a better entry here yesterday down in the profit pit. If you're in the profit pit down in the Discord server, you know exactly what we were doing and why we just narrowly missed that one, which is quite unfortunate. But nonetheless, we've got some good growth coming in here. We've got some really interesting kind of structures moves to the upside. We broke up higher than the B wave swing high here. This is also a really key point for us. So that was 95.07. So that confirms that our C wave did indeed finish down here at 82.96. I know we were looking at that initial low, but then with the 5-wave reversal here, we were kind of saying that until we kind of get a breakout or a breakdown, we're kind of in a state of flux. And well, we got the breakout, so everything is looking good with a slightly truncated C-wave structure. So I'll go ahead and remove our yellow box because we don't need it anymore. Perfect. Okay, so what are we doing here? Well, we're tracking some really cool stuff in terms of our structure. We have a good reversal from down here. This was our 76.20. We said that that was really likely to be where we were going to anchor in on our wave 4 low point, right inside this little range between 74.24 and 81.18. So that is kind of where we were, and we had a great wave 1 coming up to the resistance of the 200 EMA, and we've now had a good clean break above all of that. Our key takeaways are that we need to be moving out towards $1.2835 for the wave 3, a small retracement for a 4, and then up into that final 5th wave, which we'll talk more about that on the daily time frame in a moment or so. So now we kind of have had a significant break to the upside with our structure. We understand that we are in a bigger impulsive move from down here. This is all going to be a wave 1 of a wave 3 in my opinion. As you can see, we're clearly above the 1.618. We need to understand this structure a little bit better. Okay, so we can see here there's 5 waves coming in. We have a 1, 2, 3, 4, 5. So this would be potentially a wave 3 of our wave 3. So let's go ahead and just bring that in. This is all to do with the degrees of separation between the different time frames. I'm not going to go down into a lower time frame, but you can see here this is 1.618. You have the wave 4, you have the final 5th wave movement, also constituting 5 waves. What am I actually talking about here, guys? Well, I'm talking about the wave 1, wave 2, wave 3, wave 4, and wave 5, like so. Okay, so we're still looking for a potential push a little bit higher on this one, and then that's all going to be wrapped up inside of a 5-wave move like this. So you have your wave 1, your wave 2, your wave 3, your wave 4, your wave 5. All of that will be a wave 1 of a much bigger, larger wave 3, and so forth. So for our structure, it's kind of playing out quite nicely. So once this completes, we'll be looking for a big of a collapse in the market. I'm going to be looking for a retest of this area of consolidation. So as we kind of push out towards the $1 level, we're probably going to find resistance. Resistance is probably going to come into this little range right here. Okay, so we'll be looking at basically $1, maybe a little bit higher, possibly, looking for a collapse back down towards the 87 cents range. One of the things that should hold would be 82.96. We shouldn't really come down lower than that. So for the most part, we are still looking at bullish movements here. Let's go ahead and take a look at some of this momentum. You can see the stochastic RSI is correcting nicely here. So it looks like we're still likely to see long positions playing out quite nicely before we get into bigger corrections, which we will be looking for a big one coming over the next, well, actually probably going to happen this week at some point. I'll say what this week, it's Thursday now, isn't it? So maybe actually over the weekend, maybe beginning of next week. At times a little bit difficult with Elliott wave. It doesn't really give you timing. It does kind of give you the idea that we are likely to see a correction. So at the moment, that's okay. Not looking too bad. On our divergence indicator, yeah, we're overbought. We're calling off a little bit. I expect some turbulence here, but to ultimately move back down to at least the 50 level. on the hourly. The MACD histogram, great growth. So anyone who's been kind of paying attention to the videos that we've been putting out, you know that we were talking about we were looking for a consolidation. Well, we're looking for a breakout after this consolidation. Okay, so basically, whilst we were kind of finishing off that C wave, that wave 2 low point, what we were seeing was essentially this this lack of an appetite for buying and a lack of an appetite for selling, and ultimately this is going to conclude in a big explosion, either to the upside or to the downside. And well, we were speculating to the upside based on the fact that we were in a wave 2 and a bigger kind of macro kind of fifth wave movement to the upside on the daily time frame. So everything's kind of gearing up quite nicely. Trying to time it was a little bit tough. I got a little bit annoyed that we didn't quite capture this one in the profit pit. But you know what I was trying to do if you were down there. But nonetheless, yeah, we narrowly missed that one, which was really unfortunate. If I'd caught this like 1 hour earlier, I probably would have been able to capitalize in on this move to the upside quite nicely. Anyway, nonetheless, we did catch XRP's move, so I'm not too concerned about, you know, a few missed opportunities here or there. Anyway, for those who don't know, you need to go ahead and check out the Discord server. It's linked in the description down below. If you are using one of our affiliate links for an exchange, whether that's BitGet, Blowfin, Mexi, whatever, all the kind of exchanges that are linked in the description, if you're using one of those links and you signed up to an exchange using that link and you're trading, where you can gain access to the profit pit, and that profit pit is where I actually post my actual entries, my actual stop losses, my actual take profits, and what I am doing in real time. Not just myself, but also Chris and JB. They also put down what they're doing, whether that's arbitrage, whether that's market insights, whether that is trading leverage like JB and myself. Okay, so some huge opportunities if you're into kind of trying to capture some of the liquidity out of the market by trading or trying to dip a toe or so into trading. Check it out. It's linked in the description down below. Imagine turning your trading skills into a share of a 200,000 USDT prize pool. Well, Blowfin, a premier cryptocurrency exchange, is hosting an exclusive trading competition from January the 1st to January the 21st, 2025. So you might be thinking, why should I participate? Well, it's a massive prize pool, right? As the trading volume or total trading volume increases, so does the prize pool, up to 200,000 USDT. Then, of course, you've got dual ranking rewards as well. Compete in both the trading volume and return on investment ROI categories, with top performers in each category earning substantial rewards. So you might be thinking, how do I join? Well, you need to register. Sign up to the event page between January the 1st and January the 21st, 2025. Trade, so basically just actively trade on the platform with a minimum trading volume of 100,000 USDT on any Blowfin contract during the event period. Now, that sounds like a lot, but actually it's quite easy to hit 100,000 in USDT trading volume when you use a little bit of leverage. But of course, always use proper risk management, as I'm a huge advocate for. And of course, you just need to compete, right? Climb the ranks in trading volume and ROI to maximize your potential rewards. Now, there are some important notes that you need to know about though, right? Registration. You need to click the register now on the events page after you have clicked the link in the description down below in order to participate. Eligibility, right? So it's only the taker volume that counts. So ensure that your trades meet this criteria. And of course, there's updates to the leaderboard data. It refreshes every 5 minutes. So you can track your progress in, well, almost real time. And rewards, they will be distributed. All rewards will be issued within 3 working days of the event when it finishes, it concludes, right? So this is your chance to kind of showcase your trading and strategies and kind of earn significant rewards for doing so. So join the competition, trade actively, and aim for the top. For complete details and to register, make sure to visit the official competition page by clicking the link in the description down below. Now, some few notes that we need to kind of get off our chest right here. Blowfin reserves the right to modify the event rules and disqualify participants for violations or unethical conduct. For any inquiries, please contact their support team for more details. This competition is, of course, not affiliated with YouTube or Cheeky Crypto in any way and is exclusively that of Blowfin. For more details, click the link in the description and you'll find all the terms and conditions. So the question then becomes, are you ready to take your trading to the next level? Sign up now and compete for your share of that 200,000 USDT prize pool. Okay, let's go ahead and roll this up into a daily time frame then, because obviously we've been tracking a lot of these moves on the smaller time frames. You can see here here that we are looking for this move of a fifth wave movement to the upside. Okay, this is targeting out $1.5163 to the slightly higher range of $1.8831. Now, this is a little bit short of our hopeful range of hitting 1.618 at $2.27. Okay, $2.27 is going to be our bigger impulsive move for the wave 3. And we are tracking a kind of final fifth wave movement. So this can go one of two ways. We can either overextend and we have a fantastic run to the upside. And, we hit the $2.27 and our fifth wave just goes a little bit higher than it would normally typically go. Okay, normally it would be between 151 and 188, but maybe we'll get that slight overextension and hit that 227. If we don't, then we actually fall into the territory of being above the 1.236 and potentially above the 1.382, but not hitting the 1.618. So what does that mean? Well, it means that we're entering into the world of diagonal-based patterns rather than into the impulsive-based patterns. Now, I've said many times already on this channel that the ideal world, we actually want to see an impulsive trigger, an impulsive pattern, because that's going to make it a lot easier for retail investors. It's going to make it a little bit more emotionally tolerable, right? Because if we don't, there's going to be more volatility and it's going to be more retail investors getting wrecked. So it's not that we can rule it out one way or the other. It's just that essentially it's going to make it easier for retail investors if we actually have, an impulsive trigger point. If we don't, then we're going to see more volatility. We're potentially still going to have some really nice targets in 2025, but it's going to be like pump and dump, pump and dump, pump and dump, and people are going to get wrecked left, right, and center. So we don't really want that. We want retail investors to obviously enjoy the trading experience rather than kind of completely getting wrecked all the time. So for that, we do want to kind of see 227. But, at the moment, it's not really something that's going to happen unless, of course, we see good reason for it. So as we kind of see this next pattern forming out on the smaller time frame, like the hourly time frame, and we do expect more volatility, like I say, we're in the wave 1 of the wave 3, meaning that it will be a pretty decent correction for the wave 2 before we get into the wave 3. It's possible that this overextends. If wave 3 hits this target range, then I can look at this with a small wave 4 and a potential fifth wave, maybe getting another extension to the higher side. Okay, so we can't rule out the idea that we don't hit these numbers, but for now, it's not one that we can kind of really kind of concretely kind of be confident about. Now, as you can see here, the MACD histogram has been cooling off quite a bit as we're pushing up higher. So again, we're waiting to see what happens next, because my expectation is that as we kind of push out towards 151 and 188, that this will be a higher high on price. And I suspect what we'll have is a lower high on the histogram, and this will be bearish divergence. So this is how I think it's going to go. And it's going to basically fuel a big sell-off in the market for ADA. And it's probably going to happen, if I'm trying to time it, I would say probably late Q1, beginning of Q2, so maybe kind of some point in March we might see it. It's a little bit hard to time, but yeah, it's kind of where my mind would be at. We'll then be looking at a bit of a cooling off after a pretty significant surge to the upside. This will be, not just ADA, it will be across the board. So, we take a look at this, we'll be looking at, potentially 100% move, and then, you'll be looking for probably a retest of around $1 level again, maybe even potentially lower, but that's going to be a precursor to the bigger kind of structures that we will see going on. So I'm a little bit cautious on that. Obviously, we'll keep a close eye on it and see if it's something that does happen. But at the moment, it's not something that we majorly have to be concerned with, but it's something that we do need to kind of consider. You can also see the daily stochastic RSIs aggressively moving back to the overbought area. Again, the stochastic RSI is really sensitive to price movements. So, this is an indication that there's not a huge appetite for buying this next move to the upside. Like I say, wave 1 of wave 3. So this is basically going to mean that we see another correction for a wave 2, which will be a huge opportunity. People want to capitalize on it. And then as such, that's going to bring into that next really big run where a lot of retail investors will miss it. And then they'll jump in right towards the end, and then they'll end up in the same situation as they were with this initial wave 3, where they're buying the top and then they're seeing the corrections and then they call Cardano dead, right? You see it all in the comments down below, people who don't understand market structure. Anyway, nonetheless, what we can see here is that this is likely to see a lot of volatility in the kind of immediate kind of term. So we will be looking for that continued push upwards, bit of a pull to the downside, and then another launch to the upside. So this stochastic RSI is likely to move quite rapidly, I would have thought. Now, the relative strength index is testing that 50 level. I suspect that we're going to get a rejection here, like we had done previously. Before you kind of saw that next breakout, you can see that we were dancing around this 50 level. I imagine that we're going to do something similar, maybe not as long-winded. Maybe we test it, get rejected, break it, and then have that surge for the wave 3, 4, and 5. And then once we're up in this overbought area, we'll probably see more divergences, specifically with bearish divergence, because I do think that's how we're going to be kind of getting those signals to the downside. But again, the profit pit is going to be key for keeping a close eye on all those things. And of course, we spoke about the MACD. Now, if we take a look at the accumulation distribution line, well, this is, of course, quite high. This is an indication that people have been, in fact, accumulating, but it's not the retail investors that are accumulating. It is the larger whales and the larger players. The people with deep pockets are accumulating, and they're buying out the fear that retail investors are offering up. This is quite high still, so as you can see where it was, you can see there's still a lot of accumulation going on rather than distribution. So we will start seeing distribution, I do believe, as we kind of go up into kind of into this Q1, late Q1, we'll probably start seeing distribution rather than accumulation, leading us into a bit of a rough kind of summer, I would have thought. But you know, we are still winter. There's still plenty of time. That's the 2nd of January, right? So we've still got plenty of time to kind of be trading this the best we can. So as I kind of zoom out of this, so we take a look and, you know, less focused on all those smaller movements, which you can kind of see all crowded with that little cloud of white there. We can see that this is still structured out very nicely, right? We are still looking for $5.34 to $12.73. And that journey there could be very explosive. Specifically, you know, this isn't timed, by the way. I'm not drawing these lines in a time horizon. You know, if we do see a wave 3 come up here, hitting that kind of $2.27 with some kind of major kind of overextension, you know, by kind of, you know, maybe March, April time, well, we could be looking for a cooling off during the summer, you know, getting us into late August before having a fantastic kind of final 5th wave move to the upside. This is kind of what happened previously over here as well. Okay, so we just want to be aware that if history does tend to repeat itself, we have that fantastic surge to the upside, you know, as we kind of go into January here. As you can kind of see, February is a really strong month, and if we can see that playing out, then we might actually end up with that 1.618 getting hit in those early stages before we kind of see that next kind of big run to the upside towards the $5 to $12 ranges. Of course, you know, we need to see wave 3 potentially push up into new all-time highs much sooner if we want to really kind of be talking about hitting these larger numbers. Very, very possible. We can't rule it out. So we just want to keep a close eye on things. It's very possible that I've miscalculated some of these waves as well, because it is quite a complicated structure, and it could well be that all of this is just a wave 3 of our wave 3, and actually we're not in the 5th wave of the wave 3. And if that is the case, then that is how we end up with the 227 or higher. So, you know, we'll see people drawing that out as kind of structures start to appear and start to make themselves a little bit more clearer. But for now, of course, everything is still tracking very nicely for Cardano. It's great to see a little bit of green in the market. But I don't suspect it's going to be up there for too many days before we do see a bit of brief correction, but then we get into those kind of bigger runs. All eyes are on the 20th of January. 20th of January is the inauguration. Historically, that's been a great day for crypto. So we'll keep a close eye on all of that as well. But hopefully you guys have found this video useful and informative. If you have, smash that like button. It helps spread the content to more like-minded individuals. Subscribe if you're new. And if you haven't done so yet, you need to check out some of the news of what's going on with Cardano.